If you followed crypto for any length of time, you've heard wild predictions before. But this one stops people mid-scroll. XRP to $30,000 overnight? It sounds impossible, and maybe it is. But what if the truth behind that number isn't about hype, but about how money itself is being rebuilt right now? Quietly, globally, and faster than most realize? Because when you dig beneath the surface, you find something remarkable. A set of changes in banking, regulation, and digital liquidity that could completely rewrite how value moves through the world. And XRP is sitting right in the middle of it. This is Crypto Equation, and today we're breaking down the truth behind the headline, the logic, the math, and the mindset behind those $30,000 XRP theories, and what a realistic financial reset could actually look like. Let's start with why this conversation even exists. For more than a decade, Ripple has been building technology that lets money move as easily as information, instant, borderless, programmable. That idea is now becoming reality. Governments are testing central bank digital currencies. Financial giants like BlackRock and Fidelity are tokenizing trillions in traditional assets. And the global standard for financial messaging, ISO 2022, is going live across the entire banking world. In short, the plumbing of global finance is being replaced. Whenever an old system gets replaced, two things happen. Friction disappears, and early builders gain enormous leverage. That's the core of the XRP thesis. If the world starts settling value on digital rails, something has to provide the liquidity between currencies. XRP was built for exactly that. Now, about that number, $30,000 per coin. Let's unpack it rationally. At today's circulating supply, a $30,000 XRP would give it a market value measured in the quadrillions, far larger than all global money combined. That can't happen in an open public market. So when people talk about XRP at $30,000, what they're really talking about is a revaluation inside a private settlement layer, a world where XRP is used behind the scenes by institutions at fixed internal prices to move massive value instantly. It's a theory, not a forecast, and the logic behind it rests on a simple point. If banks and central banks adopt blockchain settlement, the unit moving the liquidity must have enormous notional value relative to its supply. Think of it like the way the SWIFT network moves trillions daily, but only through ledger entries, not physical dollars. If XRP ever became that bridge asset globally, its utility value, the amount of money it can move, would dwarf its public trading price. That's what fuels the revaluation idea. So is that realistic? Let's look at what's actually happening in 2025. Ripple now operates in more than 40 countries with over 300 financial partners. Its on-demand liquidity system moves real funds between currencies without pre-funded accounts. The XRP ledger just added an EVM sidechain, letting banks and developers build smart contracts directly on top of Ripple's network. And Ripple has active pilot programs with central banks in places like Bhutan, Georgia, and the Middle East. Meanwhile, the United States is rolling out FedNow for instant domestic transfers, and Europe is finalizing its own real-time settlement rails. All of these systems will eventually need interoperability, a bridge between fiat, CBDCs, and tokenized assets. That bridge could be XRP. Now, does that automatically make each coin worth $30,000? No, but it does show why people believe XRP's potential is massively undervalued compared to its role in this new infrastructure. Let's zoom in on how money actually moves today. Every cross-border payment still touches SWIFT, a 50-year-old messaging system that takes days to clear and costs billions in trapped liquidity. Banks maintain thousands of Nostro Vostro accounts worldwide, locking up capital they can't use. Ripple's system eliminates that. Using XRP as a bridge asset, a bank can send value from dollars to yen, euros to pesos instantly with no pre-funding. That frees up working capital, a huge deal for financial institutions. When you add this efficiency across thousands of banks, you unlock trillions in dormant liquidity. That's why analysts say blockchain settlement could save the industry over $10 trillion by 2030. If even a fraction of that flows through Ripple's network, XRP demand rises exponentially. So where does the financial reset part come in? Global debt levels are at record highs. Currencies are being inflated. Central banks are under pressure to digitize and modernize. In that environment, a system that can settle instantly, transparently, and across borders isn't just attractive. It's inevitable. A reset doesn't have to mean the collapse of the dollar. It means a repricing of how value moves, away from slow, closed networks toward open, liquid ones. That's what's happening now. The introduction of digital currencies, tokenized treasuries, and programmable money forces the old rails to adapt or die. And every major financial institution knows it. Let's imagine how XRP could fit into that world. Picture a multi-tier system. Retail investors trade XRP on public exchanges at market prices. Institutions use RippleNet behind the scenes for massive settlements at agreed internal valuations. Central banks issue digital currencies that plug into Ripple's network for interoperability. In that scenario, XRP becomes the digital bridge for all tokenized value. The notional amount it moves daily could reach trillions, even if the public price remains far lower than those eye-catching $30,000 numbers. That's the real insight behind the theory. Not that XRP explodes overnight, but that its role in global liquidity expands dramatically, and its value adjusts to match that utility over time. Now let's address the skeptics. Critics argue that banks will never use a public crypto token. But the reality is changing. Ripple already works with regulated exchanges, custody solutions, and enterprise APIs that allow banks to use XRP without holding it directly. They interact with liquidity providers who manage the tokens for them. This is exactly how institutions adopted Bitcoin ETFs and Ethereum futures, indirect exposure that still drives volume and price. So whether or not banks hold XRP, they can still rely on it as the bridge asset in their transactions. And every transaction that touches XRP, directly or indirectly, increases its demand and utility. Let's talk about tokenization, because that's the real driver for the next decade. By 2030, analysts from Boston Consulting and BlackRock estimate that $16 trillion in assets could be tokenized: stocks, bonds, commodities, even real estate. Those tokens will need liquidity. They'll need a way to move between markets, countries, and currencies. That's exactly what XRP was designed to do. When you think about XRP's value, don't imagine it as a speculative coin. Imagine it as the oil that keeps the tokenized world running. Every transaction, every swap, every conversion burns a little friction. And that friction is what gives XRP its long-term worth. Now, what would it actually take for XRP to reach $30,000? Let's do the math honestly. If XRP were to reach even $100 with its current supply, its total valuation would be roughly $10 trillion, already larger than gold's market cap. For $30,000, you'd be in the quadrillions. That's not realistic in a public free-floating market. However, in a closed system valuation, where XRP serves as an accounting unit for massive institutional settlements, a higher notional value could exist privately, just as interbank ledgers today clear trillions with internal units of account. That's how you interpret the overnight revaluation concept, as a liquidity repricing event inside a controlled system, not a public market explosion. What does this mean for regular investors? It means the opportunity isn't about chasing outrageous numbers. It's about understanding positioning, owning an asset that's already aligned with where the system is heading. Right now, XRP trades for a few dollars. That price reflects uncertainty. But every month, that uncertainty fades. New partnerships, legal clarity, institutional adoption, and infrastructure upgrades. The question isn't, will XRP hit $30,000? The real question is, how much global value will flow through this network? And how will the market reprice it when that becomes undeniable? Let's consider timelines. From 2025 through 2027, ISO 2122 migration becomes mandatory for all US banks. Central bank digital currencies enter live phases in Asia and Europe. The US refines its crypto regulations, finally giving institutional investors confidence to participate. Those three shifts, standardization, digitization, and regulation, create the perfect storm for utility assets like XRP. It's not about hype cycles anymore. It's about infrastructure. And infrastructure doesn't just rise and fall with bull markets, it endures. That's why so many long-term investors quietly accumulate during periods of silence. They're not betting on $30,000 overnight. They're betting on inevitability. If there is a financial reset, it won't happen with a single headline. It'll unfold transaction by transaction, integration by integration, until one day, the old system simply isn't there anymore. When that happens, the assets that built the new system will be the ones holding the value. And XRP is one of the few that already has the partnerships, compliance, and technology to be part of that foundation. So while the $30,000 figure grabs attention, the real story is much bigger. It's about how value will move in the digital age, instantly, globally, and seamlessly. And XRP is the blueprint for that future. Let's end with perspective. Every major innovation, electricity, the internet, the smartphone, looked impossible before it became normal. XRP's journey is following the same curve: doubt, resistance, adoption, dominance. Whether the price ends up at $30,000, $300, or $30, the principle remains the same. Utility always wins. When an asset solves real problems for the largest market on Earth, money movement, time is its greatest ally. If this gave you clarity, subscribe to Crypto Equation, where we decode the future of crypto, finance, and technology with facts, logic, and long-term vision. Comment below. What do you think is a realistic price for XRP by 2030? Is $30,000 possible in any form, or is the real value in its utility? Whatever your answer, remember, in every financial revolution, knowledge is the best investment. This is Crypto Equation, and I'll see you in the next one.